Hello, and welcome to the Implementing CDBG webinar series presented by the New Hampshire Community Development Finance Authority. My name is Kathleen Weissenberger, and I'll be your trainer for this financial management module. You can download a copy of the PowerPoint slides for this webinar from the CDFA website if you'd like to follow along on paper. Let's get started, shall we? The objective of this module is to provide the grant administrators with a basic understanding of the financial management requirements for CDBG. Particularly, grant administrators should be aware that as a recipient of CDBG funds, the municipality must be in compliance with the requirements that we discussed today, as well as any other local or state requirements. Under CDBG regulations, the state is required to establish financial management requirements for themselves and municipal grantees and their subrecipients. At a minimum, those requirements must show that the use of funds comply with all of the statutory and regulatory requirements, that the funds that they have received were spent only on reasonable and necessary costs of the CDBG program or project, and they must demonstrate that the program funds have not been used for the general expenses of the state or local government. CDFA also has certain obligation and expenditure requirements as a condition of their CDBG award with HUD. All funds that CDFA receives from HUD must be obligated to municipalities within 15 months of their agreement with HUD. HUD requires that the state not have more than 2 times their most recent annual allocation on hand. And for that reason, CDFA has established an 18-month contract period for municipalities' grants for their CDBG funds. Project delays will have a financial impact potentially with grantees for the inability to apply for additional grants, loss of funding if the existing project is delayed for too long, possible reduction in state funding to CDFA. The municipality has certain responsibilities as a grantee of CDBG funds. The first is to appoint a person to be responsible for the financial management of the grant, to establish their accounting records, make sure to set up bank accounts or separate ledger accounts to establish the receipt of CDBG, and the CDBG is separate from all other local fund accounts, and establish procedures for approving invoices, submitting claims, and issuing payment to vendors. These are your normal financial management procedures that you should have in place as a municipality. Financial management systems are actually outlined in 2 CFR 200 and in the CDBG regulations. A grantee's financial management must allow for accurate and complete disclosure of their funds, identify the source and use of all funds, compare budgets with actual expenditures, have procedures that minimize the time between the receipt of funds from CDFA and the disbursement of those funds, have a process for determining the reasonableness of the costs, and everything must be supported by appropriate documentation and assure a timely resolution should they have any audit findings. There are 3 basic functions of these financial management systems. That is, have a system that can identify a procedure for recording all financial transactions, make sure that all expenditures are allowable activities and in the grant agreement approved by CDFA, and all the expenditures of CDBG funds must be in compliance with applicable laws, rules, and regulations. CDFA has a financial management checklist, Form 6-1, that your organization can use to help set up and maintain your financial management system. This form is part of the implementation guide and can be found on the CDFA website. Internal controls are the area of financial management that most smaller communities struggle with. Internal controls refer to a combination of policies and procedures, definition of job responsibilities that allow a grantee to maintain oversight and control of its cash, property, and other assets. Some of the elements of internal controls are organizational chart, separation of duties, who has access to bank accounts, blank checks and receipts, and having a comparison of actual assets and liabilities to financial records. Separation of duties is one of the most important components of internal controls. You must have sufficient staff in order to approve purchase orders and contracts, receive and approve invoices, maintain accounting documents, prepare financial reports, enter transactions, make payments without overlap of duties. The key is that one person should not have control over all aspects of the financial management system. The same person that is writing the check should not be approving the invoices. The counsel or chief financial officer that is got control of the bank account should have oversight before invoices are paid or checks are written. Different separation of duties to ensure you have checks and balances within the local government overseeing the use of funds. Grantees are required to maintain accounting records that would sufficiently identify the source and use of their CDBG funds. All of these records have to be supported by source documentation. Separate ledgers need to be developed to keep your CDBG funds clearly separated from your other municipal funds. So at a minimum, your grantee's accounting system must clearly identify the receipts and expenditures, provide for budgetary control, be supported, like I said, by source documentation, and CDFA staff and the grantee's auditors should be able to trace all of those transactions through your accounting system at any time to ensure that they were all used on eligible expenses from the beginning of the grant to the closeout. Source documentation such as bills or canceled checks and etc. would be acceptable. Again, some of those sources of your source documentation, canceled bills, time and attendance records. Source documentation should tell the story and the basis of the cost incurred, and it should have the actual dates of expenditure. For example, source documentation on a payment to a contractor would be a request for payment or what contractors call pay applications, proof of inspection to verify work and materials, perhaps canceled checks. CDFA encourages the use of purchase orders or payment vouchers when preparing expenditures for payment of any cost associated with the CDBG project. These documents are prepared in accordance with local policies and, in addition, required by federal regulation. Administrative costs. Grantees should keep in mind that all administrative costs charged to the project must be documented, and that is only allowable for those projects directly administered by the grantee. If an employee is paid in whole or part from CDBG funds, then timesheets should be prepared. Timesheets should show the exact hours an individual worked on the CDBG project and the hours worked on any non-CDBG for the total amount of hours worked in that pay period. The employee and an employee supervisor must sign the timesheet. It's also important to remember that all matching funds that were committed on the project must be documented as well, not just the CDBG expenditures, but any funds that have been committed as matching sources for your CDBG project. This slide shows you a little bit of the difference between an activity delivery cost and a program administration cost. Attachment 6.2 to the implementation guide on the CDFA website gives a clarification on the differences between activity delivery and program admin cost. Both costs are considered soft costs, but an activity delivery is a cost that is incurred specifically and directly related to the eligible CDBG activity that you're carrying out and would be classified as an activity delivery cost. A program admin cost is a general cost that related to your CDBG project or program, such as general management, reporting to CDFA, and so forth. Again, more Detailed information can be found in the implementation guide on the CDFA website. Asset management is another component of good financial management. Grantees must maintain appropriate records of their assets, whether they're in your possession or possession of the subrecipient organization. The municipality should have a fixed property ledger and a real property inventory for any and all assets that were paid for in whole or in part with CDBG funds. All requests for payment must be submitted through the Grants Management System, or GMS. Grantees can submit one request for payment per month. If the municipality has more than one open CDBG grant with CDFA, they should separate those requests and may submit one request per month, per grant, or per open contract. A sample request for payment form, numbered attachment 6-3, can be found as, again, part of the implementation guide on the CDFA website. And there is an instructions document, attachment 6.4, that goes along with the request for payment, should you have any questions on how to complete that form. Funds are then to be deposited via EFT, and the municipality must have a current EFT authorization form on file with CDFA, and that is also an attachment to the implementation guide, Form 6-5. Grantees, as part of that request for payment, are going to certify that the funds are necessary to meet current obligations. CDFA processes those payment requests for payments every 2 weeks. And once the grantee receives the funds back from CDFA, you must disperse those funds within 15 days of receipt. Now let's talk a little bit about program income. CDBG program income is any repayment of funds or proceeds paid to either the state, the municipality, or the subrecipient that is generated from the use of CDBG funds. This could be from the sale or lease of real property that was acquired with CDBG funds. It could be the disposition of equipment or property that was purchased with CDBG funds, payments of principal and interest on loans that were made with CDBG funds, proceeds from the sale of CDBG loans or obligations, or interest earned on program income prior to its reuse. Revenue received from CDBG is not considered program income if the income received in a single fiscal year by that municipality is less than $35,000, or if it was received by a nonprofit subrecipient under 105A15, which, if you have listened to the webinar on eligible activities, you will remember that a 105A15 or community-based development organization does not generate program income when they make a loan or a grant and receive revenue back. Any income received from the sale of a property purchased or improved with CDBG that's received more than 5 years after the municipality has closed out their grant with CDFA is also not considered program income. So when you receive program income, how can you use that program income? Well, it can be dealt with in 4 ways. Program income can be used as part of an approved program income reuse plan. It can be used on another open grant activity. It could be used for a future grant activity, or the funds can be returned to CDFA for disbursement through their regular program. Program income that's retained by the jurisdiction must be substantially expended within the fiscal year. The department, CDFA, considers a balance of $25,000 or less at the end of the fiscal year to be considered substantially expended. And the grantee may spend up to 10% of the program income that they have received on those general administration costs that we just talked about. So the first eligible use of your program income, using it on a program income reuse plan. There is a sample program income reuse plan on the CDFA website as part of the implementation guide, Form 6-7. The program income reuse plan governs the ongoing use of the program income, essentially continuing the activity from which it was received. The reuse plan commits the municipality to all CDBG requirements. It is essentially a grant contract. CDFA requires that all reuse plans, that the use of those funds is approved as part of that plan. And a public hearing is required to approve the program income reuse plan prior to the submission to CDFA. Program income reuse plans can be amended following additional public hearing and submission to CDFA for approval. If the municipality chooses to use program income they've received on an open grant activity, it does require inclusion in the program income reuse plan, so an amendment to the program income reuse plan. CDFA does not require that they approve the individual activity if it is part of the program income reuse plan. And the program income must be spent substantially prior to drawing any grant funds from CDFA. So, for example, if a municipality receives $80,000 in program income from a housing rehab program that they're currently administering, and they have received a grant for $300,000 for a public facilities project, at the end of the program year or during that program year, the municipality could spend $55,000, which is $80,000 minus the $25,000 balance that they are allowed to keep on hand on the open public facilities grant. However, the $55,000 must be expended before requesting additional funds from the $300,000 line of credit. Using your CDBG program income on a future grant activity, the municipality can combine their program income receipts with a future grant request. It does require CDFA approval, and it reduces the amount of the grant funds that you will receive. And the PI funds must be spent before drawing on the Treasury funds. So, for example, the municipality receives $100,000 in program income during the fiscal year. They've identified a project which they'd like to submit an application for to CDFA for $500,000. The municipality will receive approval to apply the $100,000 of program income to the future grant request. And then accordingly, when the project is funded or approved, the $500,000 request would actually be funded at $400,000, and the $100,000 in program income would be drawn and spent before any future claims were submitted to the state. Revolving loan funds and the CDBG program. The CDFA implementation guide in the financial management chapter has a very good section on revolving loan funds. Essentially, a revolving loan fund is a program set aside with CDBG funds that is separate and distinct from other CDBG fund accounts or general ledger accounts. It does require the creation of revolving loan fund guidelines that must be approved by CDFA. It does not have to be used before other CDBG funds for different activities. So as I mentioned just before, that your program income funds must be spent before you request a draw for other CDBG funds. If you have established a revolving loan fund that's been approved by CDFA for, let's say, a housing rehab program, then funds that are receipted into the revolving loan fund as program income do not need to be spent before draws are requested on other eligible activities, such as a grant for a public facility or a grant for a public improvement. However, revolving loan fund receipts are program income regardless of the $35,000 threshold. Any amount of revenue receipted into the revolving loan fund is considered CDBG program income and must meet all requirements of the CDBG program. If you're considering a revolving loan fund, contact CDFA to ensure that it's set up properly and meets all HUD requirements of a revolving loan fund. CDBG is also subject to federal audit requirements. Single annual audits must be completed by any grantee that is expending more than $750,000 in a single fiscal year of all federal awards. It's important to make the distinction that we're not talking about CDBG funds. We're talking about any federal funds that have been received and expended within a single fiscal year by the municipality or their subrecipient. So this might include federal highway funds, funds from Health and Human Services, CDBG funds, home funds. All of those funds combined, if they exceed $750,000 or more, you must have a single annual audit completed. The regulations that speak to audit requirements for federal funds are in 2 CFR 200 subpart F. Municipalities must submit an annual notification of single annual audit to CDFA within 60 days of the end of their fiscal year. Form 6-8 can be found on the CDFA website as part of the implementation guide. That form should be submitted to CDFA to the financial department. Municipalities must complete, if they are required to do a single annual audit, they must complete the audit within 9 months of the end of their fiscal year. No later than 30 days after receipt of the auditor's report, they must submit the final report to the Federal Clearinghouse. That information is also found in the implementation guide on the CDFA website. All financial records, including the audit and other contract documents, must be maintained for 3 years from submission to the Federal Clearinghouse. Please keep in mind these retention requirements are specific to audits and do not meet the minimum threshold for record keeping of the CDBG program, which you will hear about in the record keeping and reporting module. If there is litigation or an audit is initiated prior to the end of the 3-year period, then records must be maintained until all audit findings have been resolved and litigation has been resolved as well. Again, it's very important to understand the 3 years retention period from submission to the Federal Clearinghouse only pertains to the retention of audit documents and does not meet the minimum threshold for record keeping of all CDBG documents. Financial management in conclusion. Local governments that receive CDBG funds must be applying all federal, state, and local laws, regulations, standards, and procedures to their fiscal applications. They must be conducting financial management methods and procedures in accordance with generally accepted accounting standards. And all financial management practices are going to be monitored by the state CDBG program and examined closely by auditors. So it's very important that you have sound financial management practices in place. So in review, in this module, we've talked about the timely expenditure of funds and the need to reduce the time period from receipt of funds from CDFA to disbursement of funds. We've talked about the minimum requirements for your financial management systems, the process for requests for payment from CDFA, what are eligible administrative costs and how to document those, what program income is and what is not program income and how you can spend it, revolving loan funds, and audit requirements. Remember, manage correctly your CDBG funds to avoid any disallowed costs which could result in paying back funds to the state. That concludes our presentation on financial management. If you have any questions, please contact CDFA using the contact information on this slide. Thank you for your attendance.